Frank Holmes, thanks so much for coming back on Wall Street Unplugged. How's it going, buddy?
It's great to be with you.
Well, I'm glad you came on, and you on around 3 months ago, but this was important because I wanted to get somebody on that was actually at the Bitcoin conference. I was going to attend it. Very busy on my end, and I'm glad because I have some great sources there to tell me all about it. I want to hear from you, someone who was at a panel, spoken at a panel. We'll go over that in a little bit, but how was the atmosphere? How was sentiment? Remember, we're going into Bitcoin where it's down 40%, 50% from its real top in just a couple months ago. It's still tremendously over the past 6 months. But how was sentiment? What did you see there? How was it? I mean, we're talking about a conference where people paid a lot of money, and those numbers were pretty insane in terms of how many people showed up.
Well, it was insane, and the energy was electrifying. There's some real important data points to recognize. The center where this was hosted was not beside any hotel. It was 14-minute Uber drive if there was no traffic to your hotel. So when you went into this sort of area, it was outside and inside, and you listened to deadmau5 music, boom, 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 so loud, so it was hard to hear if you're outside in the heat. And inside, it was cool. But you had 12,000 people spend $600 a ticket. The whale day was $14,000 a ticket, except if you paid at the door of the event, it was $21,000, and those $600 tickets went for $1,200 at the gate. So it was unbelievable that many people would go that far away from a normal convention center and hotel convention center. And you and I have spoken at Money Show, which is always a spectacular event in Orlando with Kim Giffler's show. I think the max is like 8,000, but it's free, and it's right beside the hotel and the convention. These are diehards. These are real committed Bitcoin enthusiasts. Ron Paul spoke, and he's in his 80s. And, he was like a Michael Jackson performance. But Michael Saylor seemed to be the biggest theme of believers. And today he announces a $400 million financing of notes to buy more Bitcoin. So it was electrifying.
Now, it's crazy because we see the holders where they just, hodlers, whatever you want to call them, that are holding this asset forever, and they say they're going to hold it forever. But, I see Michael Saylor, what he's doing, where he's taking out debt, buying Bitcoin. I think it's such a big name in the industry because what everyone wants is to see more institutional adoption. That's going to be great for every person who owns Bitcoin because that's where the real money's coming in. You're talking trillions, right? So, compared to, there is a lot of money in this industry. Yet, and we can get to your panel next, but it seems like every time I heard somebody mention more regulation or which institutions need to see, right? Because they have a fiduciary responsibility to invest, accordingly for their clients. It seems like the crowd got pissed off at that. Could you explain that theory? Because we all want institutional adoption. They all love Michael Saylor, but yet when everyone puts more regulation into this, or just regulation to make sure your money's going to be safe, it's not going to be hacked, it seems like they don't want that. I don't know what they want, actually, if that's the truth. Maybe you could explain it to us.
There is an audience of hardcore zealots, I call them. And then they show up in Democratic Party, they show up in the Republican Party, and they show up in Libertarian Party. And so there is a small group of very vocal, opinionated libertarians that are there. That's just what is part of the ecosystem. More important is that there's lots of very smart people that attended this event. Many billionaires from Silicon Valley flew in, scouting out, looking at opportunities, understanding what's going on, down to young college kids that made some quick money buying on their PayPal account, and all of a sudden they made thousands of dollars in the past year. So I think that there's something big that is happening. The real regulation and the concern is when you have, I think more concern is G7 announces a minimum tax on corporations, which is basically a creep. It's going to get higher and higher, and that will stifle innovation, and that will stifle research and development. So corporations don't go from one state to the other or from one country to the other. That's socialism, and that's only bodes well for the real intellectual that looks at gold as an asset class and silver. In particular today at this event, the new digital investor that says this is what Bitcoin is to protect you against. I understand that very much so. I can appreciate and respect that. But if Bitcoin is being used for nefarious activities, for buying dirt bombs or for human trafficking or for hardcore drug movement, etc. That's just bad. It's just bad to be with. And that was the big concern coming out of El Salvador. It was great to hear a country's going to do it, but look at the country. What are their policies for that country? And so I hope that it's not for a sort of a cesspool of nefarious activities. I really hope it's legitimate to create jobs, education. So we'll see how that unfolds.
I was talking to this one of my analysts, Daniel Creech here, who's a Bitcoin fan as well and crypto fan. You mentioned gold, right? And when we were younger, we listened to libertarians tell you how, destruction of dollar, you need to own gold. And, a lot of people, even to that day, we see people that still own gold. It's the only thing they'll own. And I get it. That's us. But the younger generation right now that you're seeing it's the same thesis, right? For gold, pretty much the same reason why they're buying gold, they're buying Bitcoin for, right? They don't believe it. Same reason. But the excitement around Bitcoin and the potential gains that they've seen, even though it's come off. I mean, again, these kids are out. Most people like to be told a better story than make money on their investment, which is kind of crazy. But I guess is that a real negative for gold? Because how do you get the younger generation to really believe in gold when everything's digital now? Bitcoin is the option that they're learning about, that they see everywhere on TikTok, their social media accounts, on Instagram or whatever, Facebook, Twitter. Is that a bad thing for gold? I mean, where's the excitement there? And it seems like it's almost like a dying breed, which again, I'm very invested in gold. I have lots of investments in gold, but just want to get your thoughts on that. Someone who owns both of these asset classes.
Well, gold is much more liquid. Actually, gold is a lot less volatile. Gold is less than the S&P. We look at the one-day volatility for gold. It's plus or minus 1%, 70% of the time. The S&P is now 2%. Crypto and Tesla are all running around 6% daily volatility. So I think if you're running a diversified portfolio, gold has been a better asset class to manage that. And I think that gold is both central banks. I don't think central banks overnight with the G20 are going to all of a sudden jump into Bitcoin as being a core reserve. But we are seeing a big trend. And but we do know that historically, in the past 21 years, gold has outperformed the S&P 500 250%. Having a 10% weighting has just been wise if you're managing a diversified portfolio. And I think that more and more institutions have been buying into gold as a liquid diversifier that's outperformed the market. It's a new breed when it comes to crypto. I think what the big difference is millennials, especially boys that have been playing gaming, and they've been very good at it, like athletes. They've been rewarded in digital money. They're used to the concept of digital money. And so Bitcoin comes along as a form of digital money and a store of wealth. And I think it's more appealing and attractive to them. But whereas the big gold buying demand really is love, it's the great love trade I've characterized as, and it comes from China and India and the Middle East. It's much more important that you can wear your gold there. You get gold gifts. You get if you're born in the year of a bull, then this year you're going to get a little gold bull. In wedding season, people, in fact, if they're poor, they rent their gold for a big, looking like a huge wedding. But gold is a very important part of 5,000 years of DNA and culture that I don't think is going to be wiped out. And you need electricity for Bitcoin to work. So I think there's benefits of both of them. So I've always advocated a 10% weighting in gold is prudent and wise, and we balance once a year, and 2% in crypto. It's just needs to be wise. Now, if you're going to really speculate on these new tokens and new coins, etc., that's a complete different casino type of game. But understanding the architecture and the beauty of Bitcoin, it is literally a Rodin piece of sculpture. It's so unique and special. And then Ethereum is the smart contract, which is the backbone for the growth of DeFi. It's like the Internet of Things. It's the backbone for stablecoin that JP Morgan launches. It is now the growth for NFTs. You all need to have Ethereum as the platform. So I remain very bullish, and that's why Hive Blockchain Technology is the only crypto company mining both. And I mentioned at this conference that I believe in ESG when we launched it. Now, some of these other crypto companies started mining and followed our path, but they didn't care if it was coal, they didn't care where it was from, and now they've had a backlash over that. It's hurt Hive it doesn't make sense for us because we've always had this pure green energy, And I think that this bodes well for our future. And I believe that if you hodl a green mine coin that has never gone into crypto space, has never been involved in any nefarious activities, it's what they call a virgin coin, in 10 years, it's going to be like owning an Andy Warhol original piece of art. There's only 21 million coins are going to be out, and you're going to have a premiere like you have the Babe Ruth a card going on NFT worth millions of dollars. That's what I think is going to happen. So we mine Ethereum Classic, we sell it, pays our electrical bills, and we bank our Bitcoin in Ethereum.
Now, hey, you brought it up, so I'm going to go there because this is great. So you spoke at, on a panel at the Bitcoin conference. It was mining as a public company, all-star lineup, right? You had Kevin O'Leary, hosting the event. As moderator, you had Jason Lay, who is CEO of Riot. Then you had Fred Thiel, of CEO of Marathon Digital. And then the most important guest and popular guest, best-looking guest on that panel was yourself, Frank Holmes. And you mentioned what you just mentioned to me, that there should be separate coins in terms of how you're mining it. If you mine it ESG related or just green, it should be a little different from every other Bitcoin or whatever. And you were getting booed on stage. Talk about that. That was the only time you got booed. I thought it was out of playful fun and everything, but talk about that.
Well, the diehards, actually, I found out afterwards, thought I was Hive Software Company. They're just oblivious. Like, these are fanatics. So it was entertaining because I smiled at booing. They weren't actually listening. And then Kevin said, "You mean to say that you're going to have a coin that is green and it's going to be different pricing mechanism?" And Jason said, "It doesn't matter. You can't get a different price." Well, I believe what I believe. And so immediately he called it a Frank coin. And everyone started cheering, Frank coin, chanting Frank coin, Frank coin. And a Frank coin is what I do believe, but it has the signature. It's only mined green. It's a virgin coin, and you hodl it. And in 10 years, I believe it's going to be much more valuable.
Yeah, and if that happens to come true and come to fruition, I'm going to take full credit for the Frank coin, just to let you know.
I love it. All Franks can. Even the French can.
When you're on a panel listening and, they talked about ESG and stuff and how important it is, which, we'll get to really in depth of Hive Technologies in my company. But also the bigger theme was institutions. And Kevin O'Leary understood that. You understood that. We touched on it a little bit before. I want to get more into it because just a reaction from the crowd when, do they want more regulation? It's like, not really. But yet you need it for institutions. You could see from Kevin O'Leary, who's a person who talks to institutions. You could see it from you as a fund manager, person who talks to institutions. Again, we mentioned a little bit before, but I'd like to get that answer for you. What are you seeing in terms of institutions coming to you and asking you about Hive? Because I know that you used to have institutional coverage on Hive. I'm not too sure if you have it now. Is it tough to get institutional?
I just put a great report, a fantastic piece of research.
Awesome. So go there with the institutions. So that, I wanted to get to that because I know I'm hearing it even on our end from our security circle where institutions are inquiring, but they want to see more regulation. But if that doesn't come to the industry, it's going to be very, more and more difficult for these institutions to come in.
Well, what was really interesting for me was afterwards finding out, the persons that were yelling, that were confused, and this guy was in that whole crypto ecology system they have, and was going to report to them that we are mining what we're doing. But more important is I had hedge fund managers and I had a pension fund manager approach me afterwards, thanking me, and said that they're going to sell those other stocks they own. And they're buying Hive because they really didn't understand how dedicated and committed we are to this space of an ESG strategy. Like I explained that in Sweden, we go from 20 megawatts to 1 in 15 seconds when everyone is putting on their toasters and turning on their heaters in the morning or at dinner time. And we help the overall system and less capital expenditure. There's no harm to anyone. So there's a strong sustainability for us being in that community, that community calls us and says, guess what? We have another 10 megawatts for you. And there's a scramble to try to get this green energy, and they're giving us because we're good corporate citizens. And it's not costing us a whole lot of money. It's really not a regulation, Frank. It's a higher standard of care. That's really what it is. And I look at certain things could be really regulatory and a burden to it, but this is more about when you have an ESG strategy, is that you're just really trying to show a higher standard of care.
Definitely makes sense. And let's get into Hive because you are a mining company, and explain to someone who doesn't understand crypto just real briefly, exactly what you do, because people say, well, we mine cryptocurrencies, but what exactly does that mean? And your green initiative was put in place before we saw, the massive push to ESG today with the new administration. Now, every single presentation even on the stock side, every presentation has 3, 4, 5 pages, the quarterlies, right? Dedicated to what they're doing ESG. You were well ahead of this. I mean, this was a big theme of yours before ESG was a big deal. Talk about that, how it relates to Hive, and explain your company as someone who wants to learn about it, was learning about it for the first time.
So the big word is shareholders' rights, and then it became stakeholders' rights. So a lot of this is sort of the socialist mindset, comes out of Europe, goes to England, then comes to Canada, comes to the US, and it gets sort of filtered out to the degree. But there is a big push. And what happened with this whole thesis was really being pushed like places like Norway, which had $1 trillion pension fund, which they made all from oil, by the way. And then they said, we're not going to own any more oil stocks because that's where we made our money, and we're going to be green only. The Europeans are going to raise bonds of 1.7 trillion. $1 trillion is green only infrastructure spending. So there's a big push. They turn around and call up BlackRock and say, you got to be ESG. We're going to yank our $1 trillion out of you to take care of. So all of a sudden they scramble to be ESG compliant, and then CalPERS jumps on it. And so now we have this sort of thing growing, which we saw as fund managers happening about over 7 years ago. We know from the mining industry, especially Canadian gold mining companies, were way ahead of the curve, and they didn't call it ESG, but they call it about being sustainable. And they always found, like in Mexico, they increased the tax on gold mining and silver mining companies. Why? Because Canadian mining companies were much better at clean water for the local people. They funded education much better than any politician. There was no corruption with that. So it's interesting to watch how it's evolving. But we're sensitive as fund managers. Remember, I started Hive Blockchain Technology because I couldn't launch an ETF as Bitcoin ETF, because I recognize that SEC, rightfully so, were worried some hacker gets paid in Bitcoin and shows up on a New York Stock Exchange ETF. So that's why they've delayed this whole process. So I took this knowledge and was a co-founder with launching of Hive Blockchain. And it was an incredible wild run from zero to a massive hero, back to zero, and then now a hero again. And we weathered through all the storms, and we had institutions give us in 2017 $200 million. Fidelity was the biggest player, giving us $100 million. And it was a very simple thesis: green energy only. Iceland we started with, then going to Sweden. Now we've purchased in Quebec, and now we're in New Brunswick. So that is, we believe, is going to become very important long term. We mine Ethereum and Bitcoin. For simplicity for your listeners, every 10 minutes, it's a jump ball. I know you love this metaphor, or hockey players like drop puck every 10 minutes. And there is this run to get that puck or ball. And the fastest computers get it, and they get a piece of it. And so if you do have slow technology, then you're not going to get anything. You're just not going to get a piece of the pie. As more people get faster technology, you get a smaller piece of the pie, and they call that hashing difficulty. Basketball would be, Dennis Rodman maybe not be the tallest guy, but he had a high vertical jump and he had the longest arm. So he got a lot of the jump balls. So every 10 minutes is extremely competitive to get there. So you always have to be upgrading your technology to get a piece of that pie. Today, that pie is only 6.25 coins. What do you mean by that? Well, if we get a piece of the pie to validate the blockchain that this is an uncorrupted coin, and we get a piece of that, then we get rewarded and shared 6.25 coins. A year ago, it was 12.5. 5 years ago, it was 25 coins. So every 4 years, it halves. Started out at 50 coins reward, went to 25, went to 12 and a half. It's now 6.25. And that will have again in 3 years from now. So the supply is shrinking to the maximum amount of supply is 21 million coins. And if you get enough people believing that this represents value, and there's only 21 million coins, Metcalfe's law suggests it grows exponentially, and that's what's been driving it. PayPal last year allowed anyone to buy a fraction of a Bitcoin. You can't buy an ETF on PayPal, you can't buy a stock, but you could buy Bitcoin. And you could turn around and sell it. And you could turn around with that and go to Best Buy or Amazon and buy a new TV. So it created this huge adoption process. What we've seen now is this past correction from the top is really, it's quiet. There's no big selling. The volumes have all just contracted. And this correction is basically what we call quiet trading. There's no big panic dumping. Even with Elon Musk, all people do is pull back their bids, wait till this settles. And I think this is really interesting and sets it up for the next big leg. We were up 2 standard deviations over 20 trading days, 60 trading days, and 1 year trading going back 2 months ago, if you see it, look in March. And now we've corrected back that we're down 1 standard deviation. So we're getting into that sweet spot if you're a trader that some catalyst will take place and will give you that next big up leg. But you're going to get these virgin coins if you have fast computers and you're there every 10 minutes as a player.
I know you're going to love this next question because real quick before I get back into Hive, just explain the deviations and why that's a big deal and like as a comparison and you know how it's 2x higher, 1x lower now. Just explain that and why that's such a big deal because that is fascinating.
Well, thank you, Frank, because sometimes I just speak, because I'm so used to talking about it. It's so important to clarify it. Everyone has their own DNA. And every asset class has its own DNA of volatility. And that DNA of volatility is nice because it's just mathematical. So you can turn around and do a calculation, an approximation with a 70% accuracy that over 1 day, 20 rolling days, 60 rolling days, 12 months, or any time period you want, what is that DNA of volatility? So what's interesting is that the gold has a DNA volatility of plus or minus 1%, 70% of the time. So when do you want to buy gold? When it's down 2 or 3% in a day, because mathematically odds in your favor, it will revert back up to the mean. Anytime gold is up 3%, 4% in a day, odds favor the following day it falls because it's up too much against its normal volatility. But the S&P is 2%, so it's more volatile than gold. But most of those talking heads on television will tell you gold is more volatile than the S&P. Not true. Now, when we come to crypto, that's another story. The daily volatility of Bitcoin, Ethereum is 6 times what gold is, 6%. And it's more like Tesla. It's a non-event for Tesla to go up 6%, fall 6%. It's what happens 70% of the time. So you as an investor, an early investor or trader, it's always helpful to respect the DNA of volatility of that asset class. And I write about it all the time. I publish every quarter when I publish about Hive's earnings and I publish about Grow US Global's earnings. I always say, remember this DNA of volatility. And it slightly changes over time because of new factors. But basically, it's important to recognize that crypto is 6 times greater than gold.
No, that's great. I really love how you explain that. I mean, because the importance of it. That's why I said, hey, just get a little more detail into that. Because sometimes when we get mathy or stuff, but you show the importance of why that is, and just the comparison to S&P 500 and Tesla's awesome. Now, talk about Hive itself, because
Frank, just to add that most lawsuits against public companies and brokers is because of volatility, and they immediately go to look for fraud or something else. And if you educate people about this DNA of volatility for things there's no fraud, it's different asset classes have this volatility. It's easier to stomach. There's not manipulation of the markets. It's new industries, new breakthrough exploration companies. They all have an R&D companies, biotech have higher volatility.
Makes sense. So getting back to Hive here, one of the things that people say, well, the negatives, right? And I always like when you know the negatives up front for a company, they're usually factored in. But they say it's not as easy to scale because you mentioned like the technology behind it. You have to buy the best computers to mine this, right? Usually Antminers, and we know there's a chip shortage, really impacting the auto industry, but, so even technology companies as well having trouble. You also have to find electricity that's cheap, right? Which is not easy to do. So you have to be in the right areas. And then, like you mentioned earlier, mining gets more difficult over time. Plus, you're looking at an industry where, margins are, pretty heavily dependent on the underlying commodity, right? So how do you deal with all of that now that you've been through this process? Because Hive, thank you so much. I'm an early investor, thanks to you, in this company where you've been around for a while. This isn't like, hey, let's take advantage of crypto, just like people take advantage of cobalt when it's hot or whatever. You've been in this for a while, so I know you've seen this. How do you address those risks, or how do you limit those risks? Because those are still concerns for a lot of investors out there.
Well, first of all, understand the great biblical story of Joseph and the Pharaoh. The Pharaoh's having all these dreams, and there's tremendous crops, and everything's doing well, and then there's for 7 years, and then it's a disaster for 7 years. And Joseph says, it's simple. Save enough each year for the 7 years. For the 7 years, you're going to have this drought. That's what he's telling you. You need to have reserves. So having cash and having position, it's just sort of prudent to have. And I think that's something I've learned from managing gold funds, because gold fund volatility is greater than gold. And we get these incredible bull markets, and we get these bear cycles, these we call winter cycles. And you have to have reserves to be able to weather the storm. I think with crypto, a big part is cheap electricity. You have to make sure that you have inexpensive electricity in safe jurisdictions, and I think that helps you weather the downdrafts. In Sweden, our cost of electricity is like 1.7 cents, and we were able to hedge it for a year. So it's inexpensive. There's a surplus of hydroelectricity in that whole region. That's why Google and Facebook are there. And so it's finding those sweet spots so that you can weather the downdrafts.
Yeah, and I'm looking at your website here, bringing it up, just showing everyone, if you go to Hive, guys, just an overview of your different operations here, which is really cool, and just showing pictures and stuff. But no, that makes a lot of sense. So, getting back to the point where you have about, there's probably more than 3, but I know 3 who are on your panel, and Mara as well. Is it hard to secure those machines right now? And are you guys in the perfect place for this? Because that seems to be a huge advantage if you're able to do that. And I think that the market, from what I'm hearing over the last months, opening up a little bit more, but it was really tight there for a while, where if you would order some of these machines, you're looking at 6 months or even more of actually getting them.
Oh, and it's not just that. You have to give half the money up front, and they still don't deliver them on time. That's wow. A very frustrating part. We had this time last year with Bitmain. And then we've made it on all our press releases. We talk about this chip, the difficulty since last year on logistics. What we had to do with all of our GPU chips is basically expand the memory card from 4 gigabytes to 8, because the file, they call it DAG file for Ethereum, it grew so big that you need more memory. And so that's we saw just delays and disappointments of sending over our cards, upgrading them, paying the difference, and getting them back on time. And so with that, I don't think it's going away for a while. Some of the great businesses have been cargo jets. I mean, these jets are doing phenomenally well. They fell less than the airlines industry at the bottom because it's the only place to move things around, and now they're booming. And the same thing happened with ships because the UN passed all these green energy on what type of oil could be used for these ships. So half the ships really can't move products around the world. So you have technology shutdowns, you have shipping. The guys making all that money right now are cargo airlines and cargo shipping business. So I think that's just something that there's always someone that wins in this. But for us, we use other suppliers. We've been very vocal about the concerns we have for it, but we're getting our equipment. It's slower than I would like. And I think that this shutdown in China is a flip-flop. They shut it all down, so all of a sudden there's more chips being able to be sent over here, and then all of a sudden China's just going to open up again. It's just so corrupt, the policies over there. The process for disclosure, it's annoying, it's frustrating, but we seem to weather through it, and we're having access to other chip providers, both from mining Bitcoin to Ethereum. And the big CapEx spend, we've spent over $100 million now on chips being delivered to upgrade. And then we're going to now expand all of our Ethereum platforms, probably spend another $100 million over the next year. But as a company, our run rate exploded to a peak. We were doing 180 million. We're doing about exahash of Ethereum mining, which made us the most profitable crypto company. At the end of December, our numbers don't know for our year end, which is March yet, but I look at the other comparable numbers, and I think we made more than other people. So I'm very tickled about being in that position. We'll see as all the numbers come out. But I think it's our focus is we bought a lot of other equipment. We'll have it delivered by the end of August. If all the equipment shows up in time, Frank, please let it show up in time. We'll have 1.3 exahash of Bitcoin mining. This is all public. This is as long as it shows up on time. And then by Christmas time, Bitcoin mining should be up to about a little over 3 exahash. Our Ethereum should be well over the equivalent of an exahash. So I think that run rate where today we'd probably be doing over $300 million and making $200 million.
Wow, that's incredible. That's really, really great stuff.
Looks like.
Yeah, no, that's really great stuff. That's really great stuff. So, okay, last question here. What was the craziest?
Frank, I get peppered by this every day, tweets, etc.
Mm-hmm.
When are we going to get listed in the U.S.? Okay, we've been public. We have filed. We have filed to get listed in the U.S. and it is just a process.
Yep.
And it's just a matter of time here. We will be listed on NASDAQ, and hopefully we will demonstrate what we did last year is the best performing crypto mining company and the most profitable for shareholders, would let us to be the best performing crypto stock.
Yeah, and I don't see it being held up because you have other companies, I think. Are they on the NASDAQ? I don't even know if Mara's actually on the NASDAQ or if I think Riot is, though. But anyway, that should be a pretty simple process. I know you guys meet all the qualifications. Now, last question here. What was the craziest thing or something that surprised you at the Bitcoin conference? Because I saw pictures. People sent me some crazy stuff all over the place. I know Paris Hilton was there. He had Tony Hawk, and again, from Tony Hawk to Ron Paul, right? Doesn't get more, especially a guy who looks at deviation and stuff like that. Anyway, it just doesn't make sense. But what was some of the craziest things that you saw there?
Well, Ron Paul's my hero. I mean, guy's in his 80s, and he's up there on the stage like Michael Jackson, moonwalking, talking. The other guys are incredible. That this guy could carry an audience, and he was able to cross like 3 generations of ages. Like, he was phenomenal. So I was so impressed with him. I'm 66, and 4 weeks ago I ran the Austin half marathon.
Nice.
I finished, but I was really impressed with this guy. Both how he told his libertarian story. But I think the speakers, I think that I spent quality time with Michael Saylor. He's very focused on his vision. He explained very well that he cannot grow his business faster than money supply is growing. So he's going to use his P&L and Bitcoin as the process. So I tip my hat to him. And he clearly had the most interest in the crowd where I was sitting. And I was about 15 rows back, center ice. And it was just, Michael Saylor's talking, get ready. And everyone's jumping and enthusiastic. And that impressed me. And then when you walk around and you notice billionaire hedge fund managers, billionaire Silicon Valley venture capital managers, high profile people, in addition to celebrities going out and walking around and telling their story. That was impressive. It had the whole spectrum of diehards to new learning enthusiasts. And I think PayPal probably really helped. There was where you could buy art, and I bid on something, and I was the high bid, $6,000. Oh, wow. Mm-hmm. I thought it might go to 10, maybe 20, because it's an incredible piece of art, the detail of the sculpture piece. It went for 100,000.
100,000.
But I said, this is spectacular. I would have paid up for it. Not 100, but I said, well, some guy with 3 Bitcoins paid for it. There's a non-event. He bought his Bitcoin 10 years ago, and all of a sudden he crystallized it. They would only accept Bitcoin to buy this art. Like, they're the new things that I saw. And mainstream CNBC wasn't there. Bloomberg TV wasn't there. For the biggest crypto event in the world, and they weren't there. But new streaming, podcasters like yourself, video streamers, etc., they were there, and the media section was large. That you just go from desk to desk doing interviews of what your vision is.
Yeah, that sounds like a lot of fun. That sounds really, really cool. So, Frank, I love when you come on. One of the ways that people get in touch with you, and I'll bring this up, is by going to your website, US Global Investors. And Frank Talk is a blog that you have that you write about pretty much anything. You're looking at gold, metals, copper. You can talk about Bitcoin and stuff like that. But if anyone wants to get in touch with you, learn more, I mean, outside of going to usfunds.com, how could they do that?
Yeah, go to usfunds.com and sign up for Frank Talk. Investor Alert comes out weekly. We have about 100,000 readers in 80 countries. But we talk about crypto. We talk about gold, luxury goods. This time last year, I launched the only luxury goods fund in America. And everyone, what are you, crazy? What are you, nuts? Luxury goods. Guess what? They far outperformed the S&P 500. The richest man in the world last week was LVMH. So I'm a contrarian type of guy. I'm gold as a contrarian. I have my thesis. Luxury goods, I have my thesis. And Bitcoin, Ethereum, I have my thesis. And I'm sticking to it. So just go to usfunds.com, sign up for Frank Talk. And if you have any ideas that we can improve on it, our YouTube is growing. We have lots of educational videos, only 2-minute videos on Metcalfe's Law, why Ethereum has been growing, outperforming Bitcoin. So that's where you want to go to.
Awesome. Great stuff. Frank, as always, love having you on, my friend. Just a great guest. Always educate, always gets ideas from you, and someone who very, very good friend. Invited me to so many different things. We've been on lots of trips together. So, I just really appreciate you coming on, buddy.
Well, thank you for your support and encouragement, my friend.
All right. I'll talk soon.